What's going on, guys? It's Chris here with Retail Algo Trader. The date is October 22nd, and this is going to be a real-time overview for the week of October 22nd through the 26th. We will be using a simulated account to simply annotate the trades we are actively taking, as well as the process of building the trade and demonstrate the risk-reward associated with these trades. All trades will be conducted with a single contract per strike to show the value of profit and loss per leg. Before we look at this week's trades, let's take a look at last week's trades. Alright, so hopping into last week's trades. Last week we had 5 trades total, as you see here on our screen. We had a top left, up here in the top left, we had a BABA play. That was a call spread, followed by C, which was Citigroup. That was also a call spread. Moving up to top right, we had Facebook, which was a Iron Condor. In the middle here, we had Microsoft. That was a call spread. And then down here at the bottom, we had NVDA, which was a call spread. So overall call spread, market kind of stayed neutral to bearish, as you can see on these daily charts here. We collected full premium on all 5 of these plays, which ended up being a 18% return on money risked for the week. Up here with BABA, we took a 16% return. Following down to Citigroup, we had a 16% return. Facebook ended up being an 18% return. Microsoft ended up being a 19% return, and NVIDIA a 20% return. So full premium, 100% efficiency on all 5 of these trades, with an 18% overall return on money risked. So we'll see you with these coming week's trades. Stay tuned. Alright everyone, how's it going? This is going to be going over this week's trades. We have 6 trades to go over. 3 of them are going to be earnings trades, which we'll go over which ones those are. All contracts are going to be 26 October, so this Friday's expiration. Today is October 22nd and is currently after hours. So starting here at the top left is going to be BABA. That's B-A-B-A. BABA is a put spread this week. We've actually traded BABA a few times the last few weeks, and as long as implied volatility stays high, we'll keep trading it. So this week we have a put spread with 143/142. That gave us roughly a 75% to 80% probability. We got filled on that with 12 cents. If everything goes as planned, we'll make 14% return on our money. Hopping over here to Caterpillar CAT. That is a earnings play. Earnings post 23 October, 7:30 a.m. So tomorrow morning. CAT was a Iron Condor. We did that with a 120/121. Then we jumped up to the 140/141. This gave us a 75 to 80% probability at time of entry. We got filled for 19 cents, and if everything goes as planned, we will make 23% return on our money. Hopping over to the right again, we have IBM. IBM is another Iron Condor, just based off of no directional indication, kind of forms support, but also have a little bit of resistance here. And our pop flop indicator didn't show any directional indication. So IBM, we're going with an Iron Condor of 125/126, hopping up to the 133/134, and that gave us a 75% to 80% probability. We got filled at 18 cents, and if everything goes as planned, we'll get 22% return on our money risked. Alright, so moving over to bottom left. Bottom left is going to be McDonald's, that's MCD, and McDonald's is another earning play. They post tomorrow as well, just like CAT. 23 October, and that's going to be at 8 a.m. Alright, so McDonald's was an Iron Condor. We did that with a 155/157.5. Then we jumped up to the 175/177.5. And this is actually a 90% probability trade, as you can see here. We had our top side of 175, which is actually right at our 90% probability mark. And then our bottom side was 157.5, which is actually slightly below our bottom mark, and so both of these together gave us about a 90% probability on that McDonald's Iron Condor. Max 1 year plus or minus move from a day to another day, so just from close to open on any single time. From day to day was $9.14. So trading these ranges that we're trading actually keeps us outside of that max year move as well. For this Iron Condor, the float size is 775 million. I'm not expecting too volatile of a move personally, so this trade should play out pretty well, and it's a very high probability trade with a decent return. That'll be 18% return if everything goes as planned. We did get filled at 39 here, 39 cents. All right, so moving over to the right. The right is Microsoft, and that is another earnings play. They post earnings on 24 October, which is Wednesday. and it looks like it's 4:30 p.m. Eastern time, so after market closes. Microsoft is going to be another iron condor. I like to do iron condors for earnings because you never know if it's going to go up or down. Never, no sense in betting directional when, guidance and consensus, market expectations, all factors of earnings plays, and you never know if it's going to go up and down. They could post awesome earnings, and if it didn't really jive with the market as to what was expected, you could have a crash. So there's no point in doing directional. We're going to go with non-directional iron condor, and that's going to give us this iron condor here on Microsoft, which is 103/104, then jumping up to 116/117. On our 116s puts us in between 80 and 90. And then hopping down to the bottom, we had the 104/103, which puts us right in between 70 to 80%. So this gives us roughly about 80% probability, since we're in between 80 and 90 and 70 and 80. It gives us roughly about 80% is our mean there. So 80% probability. We got filled at 26 cents. And if everything goes as planned, that'll be a 35% return on our money. So decent odds, decent return. Moving over to the right, we have NVIDIA, and that's going to be the last trade we have here. NVIDIA is a put spread, and that's just based off of forming nice support here. Directional indication from our pop flop indicator actually showed bullish, so we're going with a put spread on this, and that is going to be with the 217.5/215, and that gave us roughly a 75 to 80% probability at time of entry. We got filled at 42 cents. If everything goes as planned, that will be 20% return on our money. So those are the 6 trades for this week. Overall, if everything works out and we take full premium on all these plays, we'll take in about 21% return on money risked. We had about $744, but assuming you're trading one contract per each one of these different spreads, that's $744 of risk with $156 of return. As you can see right here on our chart, it'll show you right there on the Option Stations Pro, $156 worth of credit against $744 of risk, leaves you with a 21% return if you collect full premium on all of it, which we intend to do by trading these high probability trades. So that's this week's trades. We'll see you next week when these are closed out and we're entering more trades. Until then, we'll see you next time. Thanks for tuning in to the Retail Algo Traders YouTube channel, where we provide education, tools, and mentoring. Visit retailalgotrader.com to get custom indicators, automated strategies, and mentor sessions. Be sure to subscribe to this YouTube channel so you can get the latest content we create. And as always, happy trading.